The market's tried and failed again to rebound from recent lows. For some perspective, we're joined not just by Phil, but also Kathryn Rooney Vera, head of global research and chief investment strategist at Bulltick Capital Markets. And as I said here on set, Phil Orlando, a chief equity market strategist and head of client portfolio management at Federated. When you told us about some protection with puts, Kathryn, we knew about the coronavirus at that point, but that wasn't the only reason you thought you might hedge, was it, that you were suggesting back then? The market had run up quite a bit.
Absolutely, and I recommended the put option at a 325, 330 coming into this year. I noted high levels of complacency, and I would go against what Eamon mentioned and a couple other things. I think that, you know, it's a curious timing that over the past week you have both the coronavirus and you have Bernie Sanders, the front runner. And I think that, as I said to you a couple months ago, or over the course of the past couple months, Joe, I think that complacency had an expiration date. Whether there, you know, what portion of the correction was because of that front runner status, you know, it's hard to say, but what you can say is that healthcare fell, energy fell disproportionately, and I think that can be attributable to the rise of Sanders.
Point's been made, we didn't make it on the air, but off camera, that supposedly Bernie is the candidate that Trump wants to run against. So, you know, if you don't believe Bernie can win, then why would you think that Bernie being the nominee would be a bad thing for Trump's election possibilities?
Yeah,
but all bets are off. You don't know. Nobody knows whether Sanders could win or not.
Yeah, but that's why the put option is really in the money right now. And I'm telling my clients, Joe, to hold that sucker. Hold that thing until expiration, March 31. And if the market doesn't care when Bernie does a Sanders sweep March 3rd, if that's the case, then buy more. Buy the November 2020 put option, because there is a chance.
What are you doing, Phil?
So, obviously, the loss of life is tragic here.
Right.
And we came into the year bracing for the potential of a 5 to 8% air pocket during the first half of the year, and we're basically there. So Monday, after we were down 5% from the top, we put 1% to work. So we took our equity overweight up from 5% to 6%. We elevated domestic large cap growth, which had been neutral. We took that to overweight. Those stocks are down 15 to 20% here over the last couple of weeks. The next move down, we think, is the 200-day moving average, about 2% below where we are here. We're prepared to probably put another % to work there. So we're going to keep scaling in, I think, lower, because our view is that as we look at the trajectory of this, as tragic as it is, we look at what happened with SARS, the avian bird flu, et cetera.
But if you're right, then why isn't the market discounting this more?
Because the market doesn't know. We don't know. There's absolute uncertainty here. One of the things that gives us a little bit of confidence here, Joe, I'm going to bring you in, Gilead and Moderna, in terms of the compounds that they're working on, they're in clinicals. Right. We're hearing that we may have some good news within a couple of months on that.